Hello and welcome back to Market Vibes by CA Sri Lanka. I am Oshada Divas Gunasekara and I will take you through some of the key economic developments that took place during March 2025. Looking at the GDP figures that were released for the year of 2024, we saw during the fourth quarter of 2024 that the Sri Lankan economy had expanded by 5.4% on a year-on-year basis. The industry segment saw 13% growth, while the services sector saw 2.5% growth, with the agriculture sector negative 2.2% growth during the fourth quarter of 2024. Looking at the cumulative numbers, the Sri Lankan economy expanded by 5% on a year-on-year basis in 2024, and this was the first growth that was recorded for an annual period since 2021, given that the Sri Lankan economy has been contracting in 2022 and 2023 with the economic crisis. Looking at Sri Lanka's per capita GDP numbers, this grew significantly to $4,516 in 2024 due to the appreciation in the LKR, increase in nominal GDP in rupee terms, as well as the decline in mid-year population. Moving on to inflation, the deflationary conditions that we've seen for the past 7 months persisted in March 2025, with inflation measured by CCPI being recorded at negative 2.6% on a year-on-year basis in March 2025. Deflation is likely to persist for the most part of first half of 2025 before it gradually converges towards a target level of 5%, which is set by the Central Bank of Sri Lanka towards the end of the year. The main reason for the deflationary conditions over the last 7 months continues to be the downward revisions made to the electricity tariffs. However, as highlighted in our last segment as well, during the IMF review, the government had given some assurances to the IMF authorities that there will be a upward revision to electricity tariffs, given that the operating profit levels in the Ceylon Electricity Board are under pressure with the most recent decline in tariff rates, which was made in January 2025. Moving on to the interest rates, the 12-month Treasury bill declined by 10 bips to reach 8.25% by the end of March 2025. But this has started to reverse so far in April, with the 12-month T-bill up 6 bips to 8.31%. Overall market interest rates measured by the average weighted prime lending rate also saw a slight increase over the course of March, where the AWPR increased by 7 bips to 8.43%, and so far in April the AWPR has increased by around 10 bips as well. The second monetary policy review for the year 2025 was announced on 26 March, and the board decided to maintain the overnight policy rate at 8%. Looking at credit growth in the private sector, this continued to improve on a year-on-year basis in February, with credit to the private sector growing by 13% in February 2025 to reach 8.26 trillion rupees. The month-on-month growth compared to January 2025 was 1%. Looking at the exchange rate, the LKR remained broadly stable in March 2025, with only a slight depreciation of about 0.3%. The indicative rate published by the central bank closed at 296.37 rupees to the US dollar on 28 March 2025, and the LKR has remained stable so far in April as well. The gross official reserve position improved significantly by 7% in March 2025 compared to the February 2025 numbers. So the gross official reserve position was recorded at $6.5 billion at the end of March 2025. During the month of March, the central bank had acquired close to $402 million from the domestic foreign exchange market, and this contributed significantly to the increase in gross official reserves during the month. The target reserve level under the IMF agreement is set at $7.1 billion by the end of December 2025. Moving on to external trade, the export earnings remained broadly unchanged at $1,053 million in February 2025, both on a month-on-month and year-on-year basis. Imports, however, declined by 18% on a month-on-month basis, but picked up 6% on a year-on-year basis to close to $1.5 billion in February 2025. The year-on-year increase in imports was driven by higher consumer goods imports. The month-on-month decline was driven by lower imports in the consumer, intermediate and investment goods categories. The trade account deficit expanded 29% on a year-on-year basis to $411 million in February 2025. Earnings in net services improved by 6% on a year-on-year basis to $408 million, primarily due to improved tourism activities. Tourist arrivals improved by 10% on a year-on-year basis in March 2025, with 229,298 persons arriving in the country as tourists in the month of March. Looking at the arrival numbers for the first 6 days of April, this was recorded at 38,615 persons. However, we are moving now into the off-season for tourism in Sri Lanka, so the daily arrival numbers are expected to start declining from the month of April onwards. Looking at the Colombo Stock Exchange, there was a 4% correction that we witnessed in the key indices of the Colombo Stock Exchange in March 2025. And so far in April, there has been a sharp decline of about 7% up to the 7th of April 2025, following the reciprocal tariffs announced by the USA. This was broadly in line with how the other markets globally reacted as well to the reciprocal tariffs that were announced on the 2nd of April. However, the CSE witnessed a 3% rebound today, the 8th of April, which is the date of recording. And with that, we will conclude the Market Vibe session for the month of March 2025. Thank you very much.